I would say almost weekly someone comes up to me and asks what's going to happen to property prices when interest rates go back to 8, 10 or 12%. Now, to understand this, you first need to understand why the Reserve Bank of Australia actually adjusts interest rates and what that actually does to the economy. So first and foremost, the Reserve Bank of Australia has three real main goals. The first is to keep inflation in their range of 2 to 3%. The second is to keep unemployment at an extremely low level, or to keep full employment. And the third reason is to keep the Australian economy competitive on a worldwide scale. Now, to come back to that inflationary target of 2 to 3%, what that essentially means is the cost of your average goods or service is going up between 2 to 3% a year. So that's a bottle of milk going up by 20 cents a year. Or in real terms, your $1 worth of buying power being worth 98 cents next year. Now, to think about inflation, it's good to think about your parents. You might have heard that story of them going to the bakery and getting a chocolate milk and a meat pie for $1. Now, obviously those days are well and truly gone, but that's inflation over time. The cost of a good increasing and the buying power of money decreasing over time. So the RBA sets out to have that target sort of inflation level at 2 to 3%. Now, if it's not hitting that goal target of 2 to 3%, that's when we see interest rates being adjusted. So over the last 4 or 5 years, we've seen interest rates coming down. And that's because inflation hasn't been hitting the RBA's target. So we've seen interest rates continuing to be dropped to the record lows that we're seeing today. Now the reverse of this is true. So if we were seeing inflation above that 3% target, we would start to see interest rates creeping back up. But would they be likely to go back to those 8, 10, 12% levels that we saw back in the 90s? I think it's extremely unlikely. Now, first and foremost, the RBA does have one of their goals to keep full employment in the economy. Now, if interest rates were to go back up to 8, 10, 12%, the actual spending power and the excess money people would have at the end of each week would be extremely low, or people would be going backwards. This would have a big impact on luxury items, cars, even dining and restaurants, and you'd find that people would be really struggling to maintain their lifestyle, maintain survival week to week. So putting rates back to 8, 10 or 12% I think would be disastrous for the economy, and as such is something that the RBA is extremely unlikely to do. Further to this, the borrowing and the debt levels that each individual has across Australia has increased drastically. Back in the 90s, you could buy a house for 200, 250,000 in Sydney or Melbourne, where obviously today those prices are sitting well and truly over $1 million in a lot of suburbs in Sydney, Melbourne and across Australia. Because of those increased borrowings, the actual effectiveness of such a small interest rate rise is magnified. Obviously if you're borrowing 100,000 and you have a small rate rise, it doesn't do too much. Where if you've got $1 million in borrowings and a small rate rise goes up, it's obviously going to have a much greater impact on your spending at the end of each week. So moving forward, I really can't see interest rates going back to where they were in the 90s without extreme inflation occurring first. And for extreme inflation to occur, we would need to see extreme wage growth, so wages increasing in that 10 or 15% range year on year, and the cost of goods going up at that same sort of ratios. Now, if that was to occur for some reason, what would it do to property prices? Well, I think if people were seeing 10 or 15% year-on-year wage growth, I think we're going to see a much greater impact on the property market and property prices would skyrocket. So all in all, I think the risk of us seeing 8, 10, 12% interest rates is extremely low, and if we did actually get there, it would be because of extreme inflation, and our actual wage growth would have to go up considerably more than what the interest rates are. So I hope that provides you a little bit of insight and a little bit of certainty maybe around the future of interest rates and the likelihood of it actually happening in the Australian economy.